for you. By the way, markets have started slipping a bit. So some profit booking is coming through. The Nifty, remember, touched 17,800. And in the last half an hour or so, we've given up close to about 40 points from the top. The mid-cap index has dipped into the red. The Nifty Bank is where the bulk of the selling pressure has come. The Nifty Bank was outperforming, and now that too has slipped close to about 200 points from the day's high. So Nifty Bank also in the red. Very sharp cut, as you can see over there. Jay Bala of cashthechaos.com is with us on the show. Jay, for the last 2 days, we were seeing an up move in the market. Would you have classified it as a counter trend rally? And are you seeing it weakening now? How would you predict the near term for the markets and the key indices, the Nifty and the Nifty Bank?
Yeah, thanks, Rima. The markets are very close to end of the move, or it's probably topped out just before the Infosys results day. So, I had spelled out the one possibility last week. So I'm going to spell out the other possibility now. There's a small possibility that the markets are going to make a marginal high above 17,863, somewhere between 17,850 to 18,000. And then make a very sharp turn lower. And this is the second possibility. But in both these cases, the rally that started from 16,828 end of March, it's still a counter trend rally. And we are very near to the end of the move. If the markets try to break below 17,550 on a closing basis, the markets have already topped and the move down has probably already started.
Jay, hi, afternoon. Bank Nifty has been a little stronger. It's taken out its previous high as opposed to the Nifty, which is not. What's your view there?
Yeah, the banking index, I had put out a resistance of 42,900 last week, and the markets have come very close to it, and then it's turning lower here. And watch the 10-year India 10-year yields too. If we have another close below 7.183. It's quite probable that we're going to have an exhaustion in the India 10-year yields, and the bond portfolio, which is yielding profits for the banks, that's going to start deteriorating. So, the supports for the banking index, if it were to close below 41,700 from here, the bounce for the banking index is done. The strength is actually coming from PSU banks, and stocks like Bank of Maharashtra. It could still continue to make 52-week highs, but the strength which is drawing, the banking index is drawing from SBI, that might start to crack. So, there are pockets that might still show strength, but the main heavies could drag the market.
Okay, that's the view on banks. Jay, hi. Even while the indices have been locked in a very tight range, the broader market, at least in the month of April, has done pretty well. Look at, I don't know if you had a chance to check the moves on a couple of these railway-related stocks like an RVNL or an IRCON, some of the wagon manufacturers. They've just shot through the roof, and consistently so in the last couple of weeks. So do they make the cut for you? Anything else on the upside at all in the Indian market?
The railway stocks definitely do have little more upsides, but all of them still remain to be short-term, trading moves rather than significant, buy and hold positions. Both these railway stocks names that you mentioned, they still have one more down and up, zigzag to be done, down up zigzag to be done. So they still have further 52-week high spending, but I won't treat it as a move that's going to be lasting. When it comes to other names, capital goods could have little more upsides to work with. The BSE Capital Goods Index got something like 36.5K price objective to be done. But once again, there it's all short-term move. As long as Larsen stays above 2080, we can still consider the capital goods sector to be trending up, but they haven't got much upsides. So it's just for extreme short-term traders. Again, IT, there is a high-risk trades in a couple of names. Not for me, because I believe the Nasdaq is very close to cracking. But if you have that kind of high risk taking capacity, you might want to look at Wipro with the low, the Infosys day low as a stop, and even Mphasis BFL with 1660 as a stop. But in my opinion, this is a highly risky move. But it's left to individuals.
All right, Jay, so Wipro and Mphasis, it's a high-risk trade, but that could be providing an opportunity. That's the caveat in there. Just coming to you, Jay, just for a minute, I want to focus on the Nifty Financial Services. there's clearly an expiry factor that's playing out, because you pull up the Nifty, that's moved closer around 35-40 points lower, and the Nifty Financial Services Index, well, that's corrected closer around 150 points. The Nifty Bank, by the way, has moved into the red because of the larger, banks that have moved lower as well. So just keep an eye out on that. But Jay, from an emerging market perspective, the dollar index is very important. And actually, that's going according to our favor. We woke up this morning, we were closer to around 101.3. What's the view out there? Are we breaking down? Are we going to go below 100? Well, that will be a positive indicator for emerging markets, and India stands to benefit as well.
Yeah, the dollar index is in its last leg of its corrective move that started from 114.57. And, it can either make a marginal low below 100.7 or have a close below that and clock 99. But this is the last leg of the move, in my opinion. If the dollar index were to take out 103.36 without breaking a new low, I think the dollar index was already bottomed. But I would prefer it to see one last low below 100.7. So that's the working thesis for the dollar index at the moment.
Jay, do stay on. Need to slip into a very short break. When we come back, we'll continue our conversation, and it'll also be time for market closing.